Welcome everyone to our final stream before the big Bitcoin halving that is about 10 and a half hours away, if I'm not mistaken. It's going to be
Welcome everyone to
probably continuing a volatile day here up until that point, and I wouldn't be surprised if it continued into the weekend as the post-halving fireworks continue. As we can see, we are still way down over the past week. We had a big flush about 4 days ago where prices fell all the way below 60K. And that caused quite a bit of panic. There were some doubts and a lot of people reframing the halving from being a bullish event to being one that was kind of disappointing. And I'm reading your message, Max. Let me know if everything on the audio end is okay. In case it's not, we can take a quick pause. Okay, perfect. So where we're at now, obviously we're down big over the past week, but if you checked the markets in the past 12 hours, things look actually much better from this context. You can see Bitcoin has actually bounced almost 5%. It was up about 5% when it was above 65K just a few hours ago. So we're at least moving back in the right direction as we speak, and we'll check how prices look toward the end of the stream to see if anything significant has changed. But as of now, you can see plenty of assets have bounced big. Bitcoin up 5%, Ethereum up about 3%. You've got a few notables like Solana up nearly 9% in the past 24 hours, Internet Computer up 12%, WIF up 22% over the past 24 hours. It's been one of the leaders on the meme coin end. Arweave plus 17, Thorchain plus 16.5. Goes on and on. Most markets, you get the idea, are up pretty significantly. And social volume wise, yeah, all eyes are on Bitcoin. You can see that it's one of the few that has actually been gaining discussions as the overall amount of discussions in crypto have been going down, mainly due to prices going down and people dropping out, taking profit and wanting to sit on the sidelines until those all-time highs get teased again, which I anticipate will happen at some point this year. We put out polls throughout the past couple weeks that have varied wildly depending on whether the latest move has been up or down for crypto. That's kind of the nature of how the crowd tends to think about the markets. Nothing wrong with that. That's just sort of the what have you done for me lately type of culture that we are in here in crypto. So, we asked about a little over 2 weeks ago whether we were going to see an all-time high before the halving, and almost half of the people said yes. Some others said it'll happen later this year, and a very small amount said no. Then we asked earlier this week after prices had flushed down to around 60K, and suddenly there were much less, or I should say about twice as many people that said we won't see an all-time high, even ever, compared to what we saw in March of 2024. So yeah, people have really shifted their sentiments wildly toward the crypto markets, and we'll look into that on this call. There's something I wanted to check out. Oh, the sector breakdown. So if you haven't seen yet, over the next week, we're going to have this organized even better. All of you should see this, which is the total amount of watch lists that we really have, but it'll be organized more like what I'm showing on the My Watch List section. And I like to kind of break it down by these 12 sectors. I wouldn't be surprised if we have a few others sprinkled in here soon, but liquid staking, meme coins, layer twos, social, gaming, real world assets, AI and big data, ERC20s, NFTs, DeFi, BSC, and Binance Chain, and layer ones. All of them obviously are down over the past week. We'll eventually have some toggles where you can look at the 1 day, 7 day, and 30-day changes, just like you saw on the screener. But for now, based on what we have with the 7 day, you can see that meme coins have been the ones that have gotten the most hammered, even though WIF is doing quite well. They're kind of the exception to the rule. Social assets are also down quite significantly. And NFTs, I stand corrected, they actually did perform worse than meme coins over the past week as they continue to really give up a ton of market cap really since their big moment in the sun back in 2021. Unlike them, BSC and Binance Chain, they're actually holding up quite well. And that's a big sample size. You can see the number of assets in parentheses, 216 total assets, but the total cap has only dropped about 2%. So BNB and many of the other assets on the Binance chain are doing quite well, and might be considered a safe haven if you're considering that markets are going to drop again as we get into the halving and past the halving. We'll, of course, discuss the likelihood of several scenarios on this call. But I wanted to point that out. I'm increasingly using this watch list view more and more because of the advantages that it has to kind of look at the markets from this perspective. But anyways, I also wanted to point out, if we look at just the last month of performance for Bitcoin and the S&P, you can see right away there's a pretty heavy correlation right now. Bitcoin here in green, the S&P 500 here in teal. Both have kind of fluctuated up together, went down together. S&P probably a little more consistently. They've been kind of on a straight line down. You can see as I draw the line here. Whoops. See if I can grab the tool this time. Don't need this. Get rid of that. Move that. So that's the S&P 500 since the beginning of April. And Bitcoin is about right there. They're both kind of moving in the same direction. Meanwhile, gold is actually holding up quite well, but you can see the tight correlation and the theory that Bitcoin is kind of acting as a high leverage tech stock. Yeah, I still think there is an argument for that with the asset and just crypto sectors in general being so mainstream these days. There is a lot of dependency on how equities and world markets look. There's sensitivity still to real world events, the latest major one being the Israel and Iran conflict that's currently going on and continuing to develop right now. We're obviously not a political channel, so we aren't equipped to get into the intricacies of what's going on in that conflict and how to speculate what will happen next. But you can certainly count on the overall crowd interest of that conflict to impact crypto markets, just like they're impacting the S&P 500 on a day-to-day basis. I should also mention the fact that the tax deadline here in the US occurred on Monday. So from what I have seen, and many economists can elaborate on this, when you are following a year like we saw in 2023 that was amazing, assuming you were bullish on crypto or equities, when you turn the page to the next year, you're obviously going to have a ton of capital gains reported. There's a little more likelihood that people take profit and send the markets down, especially during the time when that tax deadline is approaching or have just approached. And I think there has been a little bit of that factoring in. Watching how the S&P 500 has fluctuated. It's obviously had a rough week, especially this past week, but you can see it really started to reverse its course when the calendar month turned to April. So I think that has a lot to do with it too. And I would just keep in mind, bull markets have their best longevity in crypto when they aren't dependent on the world markets in any way. And obviously there is a lot of dependency right now. We can even back it up. Look at we'll go way back to the past 2 years when those interest rate hikes from the Fed were really impacting things. You can see, going way back here, this was the separation where Bitcoin dropped and the S&P 500 rose. This was the good old Sam Bankman-Fried saga where the, obviously top 5 exchange in the world, FTX, collapsed, sending crypto down. We learned that FTX and Alameda were actually behind a lot of the suppression of Bitcoin's price. And once the fear and the dust started to clear, it was takeoff time for Bitcoin. And since that bottom, obviously, if we just roughly highlight when it looked like it was at its bottom from this long-term view, Bitcoin has 4x'd since that time, even with this mild retrace from the all-time high in March. So yeah, crypto's done well, but you can see even from this long-term view, there was some dependency on the S&P 500, and there continues to be. If you start to see the S&P collapse, but Bitcoin not collapse, that's the kind of sign we're looking for to indicate that there is not as much reliance anymore on equities and how real world events are factoring into crypto's price. But I mean, I still think it's kind of the new future a little bit. You know, crypto is always going to be on the awareness level from traditional investors now. It's not, you know, 2014 anymore, where crypto was kind of this more novel idea that was insulated from everything else happening in the world. And I just, unless crypto really loses relevance somehow due to some big events, I think there's always going to be a little more dependency here. But obviously, if world markets are going up, that means that crypto will. All right, that said, let's look at some of the, well, we'll start with the whales and sharks, actually, which are a bit more important, especially right now. So big bullish divergence, at least from what I am seeing right now. If we go to, let's say, a midpoint, right around March 24th, and look at prices right now. They've kind of moved. If I hold down shift and look at the top left of my screen, you can see that the price is down 7.3%. However, let's see, we can go back to right about here, and you can clearly see that the Bitcoin sharks and whales have actually accumulated about 50,000 BTC during that time. We deem sharks and whales in this case as wallets that hold anywhere between 10 to 10,000 BTC. So they're moving up as prices are moving down over this roughly 3-week, 4-week stretch or so. I like the look of this obviously a lot because generally markets move the direction of shark and whale accumulation and against the direction of the crowd's decision making and how they're accumulating and dumping. So ideally, we want to see tiny addresses dumping and large addresses accumulating. And for the most part, that's kind of been what's going on. If we merge, let's say, the very small addresses here, they just started to accumulate. So this is fascinating to me. This yellow line is the ratio of supply held by wallets with less than 0.1 BTC. So during this big run that started, I guess the latest big run started right around January 20th. Look at how much they were dumping, let's say until the exact all-time high, which was technically on the 14th, but on the daily close, we'll just say the 12th of March. So they dropped 0.046%. Let's just call it this. They dropped 2.8% of the supply that they were holding back on January 20th. So roughly 7 weeks or so went by. They dropped significantly. However, the price went up 76% for Bitcoin during that time. Then we started to see them accumulate, and they added about 1.5% back to the ratio that they were holding of the supply. And during that time, the price of Bitcoin actually went down 9.3%. These are, of course, zoomed out estimates. We can get more exact if we were to look at it day by day, but you get the idea. The yellow line here representing the tiny wallets, this is almost like an inverse correlation. I wouldn't go as far as to say it's the perfect counter indicator. There are plenty of times where small wallets are still accumulating and prices go up, but this isn't just cherry picked. There are tons and tons of examples of small wallets, you know, getting FOMO fever. Like for example, just throughout December, when they're really starting to get excited because prices keep climbing, they ended up being correct for a little while, right? But eventually, you know, as prices showed a little sign of potentially correcting, the little guys basically said, I'm out of here. I don't want to risk prices going down anymore. and then they're kicking themselves all along this drop here as prices soar. So yeah, now over the past 2 weeks, they are accumulating again and prices have been going down. However, I still put a lot of credence into this dark green line, which is staying quite high. I mean, frankly, the whales and sharks have been just scooping up more and more coins any chance they could get going into this halving today. And if we go back to late January, they've accumulated a little over 206,000 BTC, which is just a ton. So that's going to overrule any behavior that the small wallets are doing. But the idea is you want to see a lot of time where the big guys are doing that and the small guys are doing, that. You get the idea. Besides that, we talked a little bit in one of our recent videos about the supply and exchanges for Bitcoin and how it's been going down pretty consistently. Don't take these exact numbers on the top left here too accurately. Take them with a grain of salt because we admittedly have many omitted exchanges that can skew this exact number. But generally, we do support the study of this line in terms of just the overall direction. So based on the known exchange addresses and non-exchange addresses, when this line's going down, that's generally a good sign because it means there's less risk of a future sell-off on Bitcoin and just for crypto in general because of any sell-off that could happen on Bitcoin. So you saw like a minor blip here on the 17th. If we zoom way in, see if I can, it's fine. We did see this big upswing and there was a bit of a drop in Bitcoin's price, but overall, I mean, it's just overwhelmingly showing that Bitcoin is staying off of exchanges right now. And I like the look of that a lot. As far as Bitcoin discussion, if we look at the just overall amount of mentions of BTC, you can see that it's been climbing. It's certainly up high. This horizontal line here marked as the 0 axis, this is actually marked as 20% of discussions related to Bitcoin versus all of the discussions. So anything above that means there's quite a bit of interest in the #1 asset. If there's a sudden spike, especially like this, or even like this here in pink, those often signal a correction. This was a exception to the rule. This is why we can't just look at one metric. Sometimes it's a very short correction and then there's a fake out and it keeps going higher and hits an all-time high. But for the most part, if you're seeing a sudden climb like this, it often leads to a correction. This is more of a gradual climb that we're seeing now, and obviously you don't need an expert to tell you that this is due to the halving and the increased interest around Bitcoin as a result. But I would just be a little weary of how much hype it's getting. I think that for the most part, the halving is an event that's kind of like a foregone conclusion and has been known about for months, even years. Everyone knows pretty much the exact date of the halving as soon as the last halving occurs. So it's going to be an inevitability that the halving occurs and it will be fine. And this isn't like an SEC decision countdown where we don't know what they're going to say. This is simply an event that is going to make the process of mining more expensive and therefore less interesting. How can I phrase it? Less pursuitable. Well, it's not even a word. Less interesting from a cost-effective standpoint for miners, therefore making it less Bitcoin would be implied to be coming back into the supply. Therefore, every Bitcoin that currently exists is a little more scarce. So I can word that way better, but you get the idea. It's an event that's going to happen and have an impact on how much Bitcoin continues to enter the space. And the reason people call it a bullish event is because the kind of like if you were mining for gold and suddenly your pickaxes were half as effective at getting that gold out, it would mean that every gold that's already come out and is circulating around the world is that much more valuable because it was already mined. So people knew about that. There's a lot of theories as to this bull run being related to the excitement around the halving that's happening today. And for the most part, I believe that the price is already a bit baked in, and now there's just a bit of uncertainty as to what this halving date is actually meaning. There have only been really 3 other notable halvings. I wouldn't count 2008. Bitcoin was barely even a thing at that point. But 2012, 2016, and 2020 were all major bullish years for Bitcoin, and a lot of people attribute, probably correctly, the price gains to the halvings that occurred those respective years. So 2024 is following an incredible year. 2023 was huge. And I would just be mindful that there could be some overhype and people believing that, you know, as long as you invest in a year that the halving occurs, you're going to earn a lot of money. And if the crowd universally believes that, that can jeopardize that theory. Markets obviously go the direction of the crowd's least expectation. So just keep that in mind. And I think things like these drops here that kind of spooked traders over the last couple of weeks, we need more of those to get traders a bit more fuddish going forward throughout the year. As far as funding rates go, I'd also keep an eye on the fact that there have been some increasing shorts just over the last day. Notice how this red bar has occurred. This is the largest red bar we've actually seen this year, and it represents the fact that there are more shorts than there are longs. This is specifically on BitMEX here, which does have a pretty high correlation of being correct in terms of funding rates moving the opposite direction of what's about to happen in the market. So when they start longing a lot, that's when prices drop. When they start shorting a lot, that's when prices bottom out and start to rise. So I believe that these little shorts that have been occurring over the last couple days have aided in the rebound that we're seeing right now that eventually got Bitcoin back above 65K. And even after the rebound, you're actually just seeing more people shorting right now, thinking that this bounce isn't real, maybe considering it like a dead cat bounce or something like that. But yeah, clearly on BitMEX, major shorting. Binance is a little more neutral. You can see this tiny little blip here. Let me just take off everything else for a minute because there's so much weight that goes into Binance specifically being the largest exchange in the world. You can see it actually saw the first little blips of more shorting than longing about 24 hours ago, and that obviously had a positive impact on price. You just don't want to see these bright green lines start to pop up again, which would indicate we're getting overheated, over leveraged, too many, margin and leveraged positions that expect prices to continue to balloon. And that's when those get liquidated and send prices plummeting in a hurry. Also keep in mind the total amount of holders. They have been surging, just like we looked at with the wallets that hold less than 0.1 BTC. That's what a lot of these wallets are comprised of. So it's going to move the same direction as that line for the most part. And this is essentially just measuring any wallet that holds greater than 0, whether it's 0.00001 Bitcoin or 93,000 Bitcoin. This line is counting all of those non-zero wallets together. Generally, we actually like to see this line moving down as a good sign that prices are going to move up. You can see it kind of topped out right after this line stopped going down, and once it started to rise, prices were starting to collapse again, and prices have really dropped as this line has moved up, starting in about 2 weeks ago here. So that's kind of what you would expect when you see a lot of FOMO toward the markets. You'd much rather see kind of a uncertain roller coaster of wallets. Percent of total supply and profit, by the way, is very interesting. Obviously, it was up at about 100% near the all-time high here because there had never been a coin that had been mined above the highest price ever in Bitcoin. But as prices have started to get volatile, you can see that the percentage of Bitcoin supply has actually fallen back below 90% now. Overall, there's about 17.67 million BTC that are at a higher price than when it was first mined. Take that for what you will. I like looking at, optimal bullish conditions where there's above 80%, or I'm sorry, below 80% of Bitcoin in profit. But as time goes on, that's going to always change the baseline of what is considered bullish versus bearish. And eventually all Bitcoin will be mined, and that arbitrary number will kind of go out the window. But for now, we can at least be happy that we're back down below 90%, which is the first time we've seen that occur since early February. And we saw from this point, prices ended up going up about 63% more before eventually hitting that all-time high. Okay. Next up, let's take a look at some of the trending words. And we will still look at a few more Bitcoin metrics and some other metrics. Even though it's a big day for Bitcoin, we can certainly still check out some, maybe one or two other altcoins here, because I know some of you have questions about them. So unsurprisingly, the halving is the #1 topic in crypto right now. Everyone is focused on it. You can see the AI summary saying the word halving is trending due to discussions about the upcoming BTC price halving and its potential impact on supply and price. Experts predict potential downward pressure on the market by miners after the event, with less than 100 blocks remaining until the event takes place. Obviously, it's much less than 100 blocks now. But yeah, this part is interesting. Experts predict potential downward pressure on the market. I don't know. I mean, this is of course a summation of the past 24 hours of discussions, and before the relief bounce that we saw these past 24 hours, there was a whole lot more bearishness in the market. But this AI summary really captures why it's so important to be a bit of a contrarian to what the crowd is saying. When an AI or just anyone out there says experts predict, we don't say that about ourselves. We obviously analyze the markets a lot, but I don't simply say I'm an expert and I predict, because who am I to say that I have a better judgment on the future? I can look at metrics that increase the probability of something, but when you see experts predict, this is kind of them saying the people that can fortune tell the best in markets. And I don't buy it. I think this is kind of a way to get a crowd narrative going when people tweet and say experts predict. What they're really saying is this is what the crowd thinks. And the crowd are the opposite of the experts. They're the ones who get it wrong the most. So I think that this is a good sign that a lot of people over the past 24 hours have been predicting that there's going to be downward pressure on the market because of miner behavior. I think miners already are and have been prepared for the halving for months, and whatever true price Bitcoin should be at has already been to a large extent baked in as miners prepare for it. Yeah, maybe there's some last minute mining going on before some turn off as a result of the less cost effective conditions moving forward, but I'd be, skeptical when you see things like experts predict. Fiesta account, this has been a thing throughout the past week or so. I'm not going to talk too much about it. Bitcoin at #3, not surprising there. Iran, we talked about how real world events are seeping into crypto, causing Bitcoin to drop below 60K. No one can say that for sure, but we did create a video ourselves showing how there did seem to be an inverse correlation to price and the overall mentions of war and conflict related events happening in the world. But eventually, as we saw with Ukraine and Russia a couple of years ago, even Israel and Palestine about 6 to 10 months ago, throughout when it was getting the most discussion, there's always, not always, but oftentimes there seems to be a big drop and panic as a result of, an impending war. And as it becomes less relevant, or at least less talked about on a daily basis, even though the conflict is still going on, we often see the opposite occur and prices start to really rise, showing that people may have overreacted to the impact it would have on crypto at the very beginning. Bitcoin having a number 5, that's just a attached, 2-word keyword that's been going around. Israel number 6, blocks, all related to the halving. Token 2049. This is a big crypto event happening in Dubai where there's a lot of crypto teams and CEOs attending. Avail mentions in Telegram posts offering it for sale at different prices. I don't know enough about this. The word runes is trending due to the runes protocol developed by Casey Rodomar, allowing digital assets to be inscribed directly onto individual Satoshis, effectively turning each Satoshi into a unique digital canvas. Sounds like it has a lot to do, kind of overlapping with the concept of NFTs there. And that's the top 10 trending words. I also prepared, a quick chart on how many bullish words versus bearish words are happening just in the past 3 months. You can see there have been, let me put on shared access here. There have been some major instances like here, where obviously people are talking about buying the dip very confidently. They did so here as well. And oftentimes you'll see prices start to rise afterwards, but then have the opposite effect on a larger scale after it dies down. We want to see a lot more red here. And I think for the most part, that's kind of been what's happening. The amount of bullish, buy, buying, or bought types of keywords have been on the decline now for about 6 weeks, where the amount of sell calls are going down too, but at a much slower rate, meaning that the crowd is becoming a bit more bearish over time. And we can look at the tokens and check out the little widgets, and you can see that the amount of comments toward Bitcoin is actually pointing it toward the asset being pretty neutral right now. It had been in this region for most of the past 6-7 months, going back to like early mid-October when prices were bottoming out and things started to turn around. There was just tons of bullishness, but right now it's just kind of sitting in neutrals. There's just so much uncertainty, and we've had a lot of volatility over the past 5 weeks since the all-time high. So keep that in mind. Toncoin as well. This has been one of the top performers over the past month. It has seemed at times to be immune to market corrections and been one of the few that's just continued to rise. Tether here at number 3, interestingly, due to volume spikes in various crypto pairs on Binance with significant increases in trading volume and boost scores. We generally, when you see a stable coin in the top 3, it's a sign of fear because people are questioning the validity of holding it and kind of just having doubts about crypto in general. Litecoin at number 4, one of the OGs, due to Litecoin's bullish activity and potential gain breakout. So it just looks like there's a little bit of a positive sentiment spike toward Litecoin right now. Ontology, a little bit on the bearish side. Rune, a little bit on the bullish side. WIF, we talked about it being one of the top recovery assets in the past 24 hours. It looks to be well into the bullish territory again with traders. Polkadot, slightly in the bullish territory, one of the top development activity assets week in and week out. Ponky, I don't know much about it. wild price discovery with significant gains. So it's basically a pumping asset that's getting some increased attention. I believe it's on the Solana network. Someone can correct me if I'm wrong. And then CRO is very bullish. This is the native token to crypto.com. Lots of people seem to be talking about it quite positively right now. So that's a little top 10 trending token recap. And now let's check out the alpha narratives here. I got word from the team this morning that there is some updates to our alpha narratives charts. And yeah, not surprisingly, the halving here is making up a ton of the overall discussions right now. AI actually starting to get some increased discussion once again. You'll notice when prices are correcting the most, kind of like here, this was, 1 week ago when prices were really starting to sink. The halving was being talked about a lot and everyone's panicking going, what the heck? I thought prices were supposed to go up during the halving. So that was why there was such a large portion here. You can see, AI and altcoins in general were being talked about way less because no one wanted to touch them during the retrace. But yeah, now they're starting to be talked about again. I believe it's due to a lot of front runners in the markets being AI related right now. Buy the dip, not surprising there. A lot of people have been increasingly interested in buying the dip. When the dip was at its peak here, of course, there's a larger ratio. Meme coins, you can see it peaked around this bottom, I think for the wrong reasons, because meme coins were getting really crushed at the beginning of the week, and now they're barely being talked about again. But as soon as you see some meme coins break out, you'll start to see this line widen. ETFs starting to widen a tiny bit here. Interesting to see Fed and inflation. You can see when it was being talked about the most as prices were correcting, everyone was attributing the correction to, or at least partially due to the inflation concerns that were discovered by the US over the past week. And you get the idea. I won't go through all of these, but I strongly encourage you to continue watching this social narratives dashboard, as it's a great way to get a gauge on what is driving markets, where the crowd is swiveling their head to next, things like that. Also check this out, the mentions of bull market versus bear market. I find it fascinating and unsurprising that mentions of bull market have been falling off a cliff really as prices have started to get volatile, and there's no longer just a consistent day in, day out trend for markets to go up. So people are having doubts about crypto being in a bull market now, and it's caused far less mentions about bull market anymore. Meanwhile, bear market, look at how much traction it has gotten over the past week. Big spikes as prices have corrected, which should be considered a good sign that markets can recover. People might be prematurely attributing the current market conditions to being bear market conditions. And I like the look of that, because that's kind of like what we see, if I can find where my tab was. I might have already clicked off of it or changed the tab, but when we looked at the overall mentions of buy versus sell, you see the amount of buy mentions really plummeting fast and sell mentions not so much. So that lends to what we're seeing right here. All right, a few more Bitcoin on-chain metrics I want to look at. Also, I want to check out the midterm MVRV model, so I'm going to load that while I talk about this. So transaction volume, mostly going down. We do see a bit of a spike that's happened in the past couple days, but for the most part, the peak happened right before the all-time high hit. So yeah, utilities going down a bit. Same goes for daily active addresses, starting to move down. Circulation, more or less staying pretty flat. I'm not too worried about that. So the utility of Bitcoin perhaps slightly dropping over the past 4 to 6 weeks, and this past week has been even more dropping as people have been uncertain and kind of having some paralysis as to making any big moves while prices are so volatile. MVRV, so we'll check out the model as well as it loads, but the 30-day MVRV for Bitcoin still in the negative range. So addresses that have been active over the past 30 days are showing that they're down money at the moment, down 2.6% on average. That's a good sign. If you're bullish, you want to be entering markets or adding onto your position when this 30-day MVRV is low. The long-term 365-day MVRV is still quite high at plus 32, 33%. So be a little bit concerned about that still. The long-term trend still suggests we could see a little more bleeding until it starts to get back to zero. We talked about funding rate, how the shorting is starting to pop up a little more. That is a good sign if you're bullish. Whale transactions, just like with daily active addresses and transaction volume, they have been dropping as prices have become more and more uncertain. The amount of overall wallets that hold different tiers, you can check out, as I already mentioned, these are starting to go up again, the micro wallets. And then the mid ones are kind of staying flat, and the large ones are moving up. So I'm not too concerned about that. We can skip past supply distribution. But as far as profit versus loss days go, nothing too special here. There's actually been quite a few loss days occurring. I open this up. We want to mark it right at the 1.0 line, which is about there. So yeah, throughout the past week, it's been more loss days than profit days. That's a good sign. So a lot of people are capitulating and moving their coins at lower prices than when they obtained them. Today so far is actually looking like one of the highest days in over a week. But these are ideal times you want to buy when there's big dips, going back here to mid-January, big dips where people are moving their coins at a loss. That means you can be scooping them up while others are in pain. And that's kind of the name of the game in crypto. Mean dollar vested age, it's continuing to look flat, this curve here that is representing the average age of Bitcoin sitting in wallets. Still down at 503 days on average when it was way up 639 days back in October. So yeah, it's fallen considerably, and that's one of the key components for any bull market is this gold line moving down. It's been flat throughout April so far, and I'm kind of waiting for it to move one direction or the other. A further drop would be a great sign that the bull market is going to resume after the halving ends, but for now it's kind of like on pause, if you will. Supply and exchanges, we talked about how it's been moving down. Social dominance of Bitcoin is surging once again as we get to the final hours of the halving. And then weighted sentiment, we saw 5 straight weeks of the sentiment being in the negative range. So far this week, it's actually looking positive once again. So there are significantly more positive comments about Bitcoin compared to negative. I am not shocked considering the past 24 hours has seen a bit of a relief bounce, but you're rooting, assuming you're bullish on crypto, for more negativity like this, these stretches where people are skeptical and don't believe that Bitcoin can continue to climb. RSI for Bitcoin actually just a little below 50, which is a good sign. 50 is considered average, so it's at 46 now, meaning there's a slightly slight indication that we're in a opportunity zone right now, but very, very slight. All right, let's check out that MVRV model. Yeah, not surprising. So on the midterm, we're still looking like it's very, very underbought after the big dips that have occurred. This is a great sign. If we looked at this a month ago, it was just a sea of overbought everywhere. But now, because of the dips, especially from the altcoins that have been getting crushed, opportunity zones are popping up everywhere that suggest that on a midterm time frame, 30 to 90 days, you could be buying into a lot of other people's pain. So keep that in mind. I like this model a lot, especially for picking out specific coins. If you're wondering what this one is, it's P Network. It appears to be the leader. There's a few others up here: Dodo, IDEX, Linear, Sushi. It's going to be the assets that you've probably been thinking about the least because they've been bleeding the most. All right, I'm going to take a sip of water here, and Balresh, maybe you can read a couple questions or asset requests if they're up there. Sure thing. All right, good old Solana. Let's see what's going on. So we'll look at the last 6 months here. Got it, Balresh. We can check that one out too. All right, so Solana's trading volume has actually seen a pretty big spike about 1 week ago as the price was dipping. It led to a very small bounce followed by more dropping. As long as the price is making a lower high, I'm still pretty concerned. It looks like most assets, like it's going to be dependent on Bitcoin getting stabilized again, but trading volume has dropped off. You can see how much it was just going nuts when it was surging above $200 for the first time in over 2 years. And right now it's kind of just middle of the road. Look for spikes as turnaround signs. So this was a temporary turnaround sign a week ago, but it didn't last long because Bitcoin was bleeding. If Bitcoin starts to get some traction again and maybe move closer and closer to 70K, that's where you'll see these volume spikes be very handy in determining when Solana is about to do a 180 and start to recover back toward that $200 level. Funding rate wise, if we look on Binance, yeah, there were, just like Bitcoin, there were some semblances of some shorting going on and still are, but for the most part, it's pretty neutral. It does look like, I mean, there are some people betting against Solana now. Let's zoom in a little bit. All of these red spikes are days or hours in which there are more people betting against Solana than there are betting for Solana in terms of their margined and leveraged trades out there, especially on DYDX. Yeah, people are looking pretty bearish. So this is a good sign. It means that that if liquidations start to pour in, they're going to kind of contribute to some rocket fuel toward a recovery for Solana. And then we have social volume and dominance for Solana. Zoom out on the price. So yeah, there's been a pretty steep decline in social volume just in the past week. Let's zoom out a little more. So of course, just like we saw with trading volume, lots and lots of discussion related to Solana just as it was topping. That's pretty normal. You saw the same exact thing happen right around Christmas when social dominance was showing that almost 1/8 of all discussions were related to Solana specifically. That wasn't a good sign. But you can see it can work in the opposite direction too when prices start to retrace and you see a sudden spike. That's usually an indication of panic and FUD. And sure enough, that was a perfect time to buy that bottom. And if you did, you would have seen prices go up about 121%, going all the way to the peak here on March 17th. So yeah, for now, social volume and dominance has really fallen off a cliff. And that's not really a bad thing at all. It just kind of means it's been ignored as the price has diminished so much, dropping from its peak about, yeah, a little over 30%. So for being the #4 market cap asset right now, or 5, excuse me, it is being talked about very little in comparison to its big hype days a couple months ago. So one can argue that it's a bit under the radar right now. And if you see a sudden social dominance spike pop up while the price is suppressed, that's a pretty good sign that you might be seeing a takeoff soon after that. So I'd be monitoring volume and dominance specifically very closely, and also keep in mind the funding rate, how that's looking, because if the shorts really start to compile, you're looking at a pretty high probability of a relief bounce coming up. For now, it looks kind of neutral though. Then weighted sentiment, you can see, I mean, this is mostly due to just the lack of discussion. There's just a little more of a bearish bias toward it, which is a good thing overall. All right, so that's just a recap on Solana. We can also see the RSI, by the way, well under 50, so this is a good sign. If you got in, 3 days ago when it was really down at 21, 22 on the RSI, that would have been a really great time to buy, or even lower on April 12th when it was at 20. Okay, so that's a recap on Solana. The other asset that Balresh mentioned to me was IMGNAI. I haven't looked at this one. Thank you. So perfect. Image generation AI. So this is an ERC20. We've got plenty of data on it, a lot more than we were able to show for Solana. We're still working on adding that blockchain to Santiment down the road. But this asset here, so it is just outside the top 1,000 in terms of its market cap. So this is definitely a micro cap asset that is going to be very sensitive to sentiment related discussion. Its current price is at about 1.7 cents. It has seen a pretty big drop. You can see just how volatile these sub 1,000 market cap assets are, but it's dropped from March 11th over these past 5 weeks. It's dropped about 2/3 of its market cap, down 67%. So yeah, it's been one of the bigger plummeters out there. Its trading volume has been pretty neutral. It's dropped back down to normal. Same with transaction volume. Daily active addresses, the amount of unique addresses that have been interacting are quite neutral at the moment. Circulation, same thing. So nothing special going on with utility. Let's see if we can get the non-intraday MVRVs up here. I'm expecting to see a very negative number for the 30-day MVRV. Yeah, that's a big time negative number. It's at negative 43%. So this suggests there could be a relief bounce coming soon because this altcoin is in such an opportunity zone. This is actually the lowest we've seen the 30-day MVRV for the asset in over a year. I don't know how far back this one goes. Yeah, it pretty much took off. It started in very late 2022. And this is about the lowest the MVRV has gotten since February 2023. And if you got in February 2023, just from this point, you'd still be up about 19%. If you got in at the peak, you would have been up about 235%. So yeah, adding onto your position or opening a position in an altcoin that's been just decimated like this one, assuming it has a valid future, which I'm assuming the person asking this question does believe it has some validity to be in the crypto space. Yeah, this looks like a pretty good time to get in, considering you'd be buying into a lot of pain that other traders have been experiencing on the 30-day time frame. Whale transactions, not surprisingly, you're going to see very few for such a small market cap asset. The last time we even had a transaction that exceeded $100,000 in value was on March 31st. Let's check out the supply tiers. It might be tricky with such a small market cap asset, but let's see if there's anything we can gather. So the price is at 1.7 cents. I would say just ballparking the whales would probably start around here or maybe here. Let's check out the percentages. Look kind of funky. This might be, yeah, this is better. So the red line is going to be sharks. Yellow line is whales. I like the look of the whales right now. They are moving in the right direction. I'd ignore the numbers on the top left side, but yeah, overall, I like the look of this for the yellow line. Let's see what the total amount of holders are way down here. Yeah, so they've gradually been moving up. I mean, it's a relatively new asset, so it's hard to get too much of a gauge, but we're actually, just like any asset, you'll see the most gains when the amount of holders are moving down. Just be careful if the asset is too small, because it could just mean that the coin is being abandoned altogether. But it's seen a steady climb over the past, what is this, 6 months or so. It has about 1,545 more wallets than it did 6 months ago. So there's a community of believers in this asset, even though it's outside of the top 1,000 for the market cap. All right, so thank you for that recommendation. First time I'm looking at IMGNAI. I think this is a good time for us to close out this stream. I want to thank everyone for tuning in for our final stream before the big halving that is now under 10 hours away. We're in the single digits, and I can't wait to report on how markets are looking after the dust is settled. We're finally past this highly anticipated event. That is a foregone conclusion. There is going to be a halving. It's going to be fine. This isn't Y2K where the world will explode or anything like that. And markets most likely will not have a major reaction. That's my opinion. But right now it is a very volatile day. So who knows what the final hours will be leading up to it. And you can check out our insights.santiment.net page, which you can find right here. To quickly tap into our latest news stories, you can see we had a video come out yesterday with our friends at Equities Tracker. We talked about Ethereum's network fees. We talked about the negative crowd sentiment right now and how that's a good sign and would lead to a quick recovery. That is exactly what happened. So yeah, you'll see more news stories coming out today, and stay tuned for our next video that will likely come early next week. Cheers, everyone. Thank you to Balaresh for handling the stream today. We'll see Maxim likely in the next week or two back on stream with me, and hope you have a wonderful halving and weekend, folks. Thank you all so much.